Hi, this is James Shug at Westpac with the end of market day report for Tuesday, March the 20th. Actually, the main driver of European markets today was China, with BHP and Rio Tinto bosses talking about slower Chinese growth, slower Chinese steel production as the economy shifts away from the construction of large buildings to more of a consumer driven economy and less steel consuming. Those concerns about the slower Chinese growth have hit equity markets and commodity markets, and along with the Chinese government's decision to lift fuel prices because of rising energy prices, that's added to the sense that the downside risks related to the Chinese economy actually might be crystallising. So there was some data out today, but it wasn't majorly impactful. In the UK, we had the fifth consecutive month of slowing of the CPI, fell from 3.6% to 3.4%. Recall that's down from a peak of 5.2% annual pace back in September last year. These were February numbers that came in at 3.4%. Still a little way to go before it falls within the 1 to 3% band around the Bank of England's 2% target. And in fact, it might take a little bit longer than the Bank of England has been expecting, given upward pressure on energy prices. But the trend is still very much to the downside. In the US, we saw a 1.1% fall in housing starts in February. That was led by a 10% fall in single-family starts. That was the first fall for that category of starts, single-family starts, in 5 months. House permits, though, rose 5%, and that was driven by roughly 5% gains both in multiples and in single-family permits. If you look at starts in January, February, they're running at an annualised pace. Let's check the number of 702,000. That compares to 568,000 in the third quarter of 2009. Which is when the US economy began to recover. So we're finally getting some acceleration from that starting point of the recovery. In the middle of last year, starts were running a 572,000 pace. So pretty much unchanged from that 568,000 pace a couple of years earlier. So in the second half of 2011 and in the early part of this year, notwithstanding the latest fall in starts, we've got a clear acceleration from a very, very low base taking place in US housing. And we're seeing that across a range of indicators. But look, that's it on the data front today. It was mainly the Chinese story that hit equities. In Europe at the close, we've got the FTSE down 1.2%. Rio, BHP, the big miners hit particularly hard, looking at 3.5%, 4% losses there. The French market down 1.3% and the German market down 1.4%. Losses of just 0.3% in Spain, and the Italian market down 1.1%. And at the New York lunchtime, we're looking at just around a 0.5% loss for the Dow. It's at 13,179. On commodity markets, as I mentioned, weakness there. So we've got copper prices down 2%. Oil down 1.8%, that's at $106.13 a barrel, and gold down 0.8% today at $1,653 an ounce. The Aussie dollar's fallen around 1.5 cents in the last 24 hours. It's just under 1.05 against the US dollar at the moment. We've got Westpac leading index coming out later today. That's the only Australian data of note on Wednesday. So I'll leave it there. Back same time tomorrow.